Canadian real estate prices are continuously declining from last 5 consecutive months. Many of the financial analysts, including Canada's biggest banks, are predicting that housing may see up to 25% decline between year 2020 and 2023. What does it mean for Canadian people who are trying to buy their first home or first dream home? How long a country like Canada, whose GDP is almost 15% dependent on real estate and related trades, can sustain this? Do you think the Canadian real estate market is crashing only because of a rising cost of borrowing? Or there is something more to it? What it means for Canadian homeowners and a Canadian young generation who is looking to enter into the real estate market? Is it a good time for them to buy their first home, or they should wait? Stay till end of this video and we will discuss in detail the factors that are driving the real estate prices down right now. If we look at this graph that is provided by Canadian Real Estate Association, so something happened in March 2020 that drove the number of sales and the price of the real estate sharply upwards. This was the time when government started printing a lot of money and started distributing among Canadians in the form of Canada Emergency Benefit Loans or CEBA loans. All that money actually went into real estate market that pumped the real estate market. If we look at the data, almost over $192 billion were borrowed in the form of mortgage bonds, and real estate prices were so high it led to a real estate bubble in the pandemic time, and now bubble is bursting and the prices are correcting up to 25%, so-called analysis by the big banks and financial analysts. Those same prices are getting corrected. Analysts are saying the housing prices can correct up to 25%, but people are missing a line here. They are saying from the cliff. That high point was not realistic. It was a housing bubble created by a lot of money that was printed by Government of Canada. The housing market has taken a correctional route and people are getting panicked. There is no need to panic in the real estate market, especially in Canadian real estate market, because it is not equal to real estate market in United States. Canadian economy is a lot more dependent on its real estate sector. Canada gets 13.5% of its GDP from real estate services. As high as national share is, some provinces are even more dependent. British Columbia leads with 1 in 5 GDP dollars, that is about 19.6% coming from real estate. Nova Scotia follows after British Columbia, which is 17.2%, and Manitoba at 14.2%. Canada's biggest province, which is Ontario, is holding 13.6% of its GDP that is dependent on the real estate. Most of the time people get panicked. They try to compare Canadian real estate with real estate in United States. But here is the point. If we look at historical data, in 2008 when recession hit the United States, it was mainly driven by a real estate bubble. There was a lot of subprime lending in the real estate sector that led to the real estate bubble and eventually the crash in real estate market. Canada had a ripple effect of that crash, but Canadian economy and Canadian real estate did not crash because what happened in United States. Exactly the same thing happening. According to CMHC report, CMHC is a Canadian Mortgage and Housing Corporation. The housing stock will increase by 2.3 million units by 2030, reaching close to 19 million housing units. If current rate of new construction continues, that number would need to climb to 22 million to achieve the affordability for everyone living in Canada. According to CMHC, if we continue our pace of building the new houses, we will be reaching a goal of 19 million new housing units by 2030. But in 2030, we would need 22 million new units to fulfill the demand. So basically we are still going to fall short of about 3 million houses by next 8 years, by end of 2030. The second point I want to mention is the immigration to Canada. Canada welcomes highest level of immigration in order to strengthen its economy. Not only does Canada have one of the world's oldest population, but it has also one of the world's lowest birth rates. This imbalance creates fiscal and economic strain. To address the pressure caused by lower birth rate and older population, Canada has been increasing its immigration level since 1980s to grow the national economy, population and labor forces. Today, Canada depends on immigration for the bulk of its population and economic growth. Every year, Canadian government is going to add up more than 400,000 new immigrants to its country. So all these people need shelter, a roof on their head. So basically there is going to be a sustainable demand of housing. And here is another point. These are only the permanent residents. Canada also invite many temporary residents. The third point that I want to bring into this conversation is the rental market. As there is more demand and less supply, rental market is going crazy right now. Canada's national average rental for one bedroom unit is $1,662, which is almost 10% higher than the previous year. The two bedroom unit is costing $2,135 approximately, and this is 13.40% higher than the previous year. The biggest rent increase are seen in Canada's one of the major cities. On top of the list is Vancouver, where one bedroom rent is $2,574, and this is increased 18.8% from the previous year. And if we need two bedrooms to rent in the Vancouver, it is costing $3,694, and this is 21.4% higher than the previous year. No government in Canada can afford to crash the real estate market, whether it is liberal, conservative or New Democrats or any other party. Eventually, Canadian economy is so much dependent on its real estate that country can do whatever it takes to sustain the economy, and real estate would still grow at a steady pace. If you like the content I create on this channel, please hit the like button and consider subscribing the channel, because this helps YouTube algorithm to spread the video among bigger audience. Thank you so much for watching.